Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, October 9th. Happy Friday to you guys. Hope you guys have some great upcoming plans for the weekend here. Today's a little light today. Yesterday we had the big day with the weekly jobless claims and the Fed minutes. But today we got the wholesale inventories, which is kind of probably low impact on the market. We had a negative back in July of 0.1%, and it grew 0.1% in August. This will probably increase a little bit as they feel a little bit more encouraged or confidence level for the fourth quarter. So we'll kind of look and watch to see how they project fourth quarter when we see September's information here. But something to kind of keep an eye on here. Right now, the stock market's up. It was up earlier a bit. The only one that's down is slightly, and it's barely down, is the S&P 500. Dow and the NASDAQ are up slightly. Again, there's not a lot of movement today as they kind of rallied a little bit after the Fed meeting yesterday. The main thing that the Fed minutes came out yesterday, not Fed meeting yesterday, when the minutes were released yesterday, the Fed basically, the notes that came out is they kind of held off because of global concerns with the China. If the stronger dollar, by raising rates will strengthen the dollar and therefore make exports a little bit more difficult, especially with the emerging markets around the world playing the currency game with each other since China started that about a month ago. And then so it makes it a little bit more difficult to with where the economy could be going. It could slow down. And then on top of it, of course, we got the jobs numbers. So that came out after the Fed had their meeting. And they think that could play a big factor, especially when they revise it 2 months prior 2 months lower as well. So something we'll have to kind of keep an eye on, and they do have a meeting this month as well. But again, there's no announcement afterwards, so they don't project any rate increase of this meeting. If there is one, maybe December. But again, now projections are being into 2016, probably as soon as maybe the January meeting. Let's go ahead and take a look, see how the bond market's affected. So we did have a pricing for the worst. It did worsen as the minutes came out. Stock market rally took the money out of the bond market, so that's why pricing got worse. Today we started a little bit lower. We're currently down about 6 basis points from where we left off yesterday. So basically, if lenders didn't price for the worst yesterday, they put it in today's pricing. If they didn't, we're pretty close. It was -6. Basically, it's not enough to make a price change, and usually we wait till about 9 basis or higher before they do any price changes. But as you can see, we are touching the 200-day moving average. It took a long time for us to be able to break above that, and of course, around the 5th, or actually like around the 14th, as we saw, we actually broke above that. So, I'm sorry, around the beginning of the month, we actually broke above that last week. So, right now, this could be because it's been so tough to get above it. This could prove a good floor for us. So, I don't think we'll break below it this week. As you can see, we're testing it, so this could bring us up forward a little bit more. Now, once you get to around the 104.65, that first ceiling of resistance, that could prove a little bit more difficult. So we may hang in this range a little bit until we get some more definitive news, especially when we start approaching the next FOMC meeting here. But I think we will probably stick within this range for a little bit here before we have any other movements in the market here. But right now we're in the bottom range, and I think we could have room to go upwards. So just be cautious. Again, this week's also been kind of pressured. The Treasury has been selling mortgage-backed securities this week and Treasuries, so that's also kind of put some pressure on the bond market and interest rates a little bit too, since there's probably not enough investors buying, so it didn't probably create the demand. So therefore, they're buying more equities, especially when there's feeling or sentiment out there that they're going to be holding off on interest rate hike, which is kind of presents a better environment for where the money could be spent. They could take those higher risks for that. All right, folks, you guys have a great weekend. Today we're about where we left off yesterday. I hope you guys have a great weekend, and we'll look forward to seeing you guys tomorrow. All right, I'm sorry. Actually, I'll be on Tuesday because Monday's gonna be a holiday. It's Columbus Day, so the markets will be closed. All right, folks, you guys have a wonderful day. Thanks so much for watching. We'll see you on Tuesday. Take care. Bye-bye.